Okay, we have a few people who have already joined. Thank you so much for joining us. Like we said, the edge cases as well. Let's wait for a couple of more minutes. I'll wait for some more people to join. Another 3 minutes, and we will get started. Hope that is okay.
तो एक बार मैं टेस्ट कर लेता हूँ मेरी प्रेजेंटेशन आ रही है क्या? मैं आपको उसके शेयर करके एक बार इसको अनहाइड कैसे करते हैं रुचि?
अभिषेक मैं तुमको मैसेज कर
हाँ ओके ओके
अभिषेक अभी स्क्रीन शेयरिंग बंद कर सकते हैं. We
हाँ
started ready.
जस्ट
Okay. So I think let's get started now. Hello and a very warm welcome to all of y'all who have joined us today for the first Pragati session of the calendar year 2025. Sahamati has been, or rather the account aggregator framework has been in full throttle for 3.5 years now. And as a spectator of the ecosystem and also a vested party of the ecosystem, it is safe to assume that we have all never been more excited about the growth and the scalability of this ecosystem than today. And we are here to share a little bit of that with all of you all today. We want to showcase to y'all what the ecosystem has been able to achieve in the last 1 year. Also, give a perspective of the growth in the last 3.5 years. Also, to tell y'all how it is now moving towards a stage of dynamism. How organizations, technology providers, FIUs, FIPs are thinking of account aggregator in a much more holistic manner towards many more deeper use cases than what it was even a year ago, where a year ago it was just probably one particular journey or one particular use case. Today we are looking at account aggregator actually being part of a strategic growth of an organization. And we also would like to update y'all on what is happening beyond account aggregator. What are the other changes that are happening in the financial sector and the financial environment, which is going to impact the user and organizations alike. We are a number of us presenting today, and like I said, it's a very exciting presentation for us. To begin with, it is an absolute honor for me to introduce you to our keynote speaker, Ms. Shallu Kaushik. Shallu has been, she is the Chief Digital Officer at Tata Capital and has been a very well-known name in the digital transformation arena in this country. She is very well known for her contributions towards various initiatives that have been taken on the digital side, on the analytics side of various organizations that she has been a part of. And personally, from Sahamati, also we are very delighted to have her here because she's been a propagator of Account Aggregator on various forums. And today she will give us a peek into her perspective and her view of this digital framework for the country at large. So, Shallu, I would request you to put on your video. And
Thanks, Ruchi.
yes,
Sorry, for some reason I'm unable to do that. It says the host has stopped it. Can you just check the rights?
I will just
Yeah.
check. Moment.
Still not able to. I don't know for some reason. Yeah. Now I got the authority. Yes.
Okay,
Thank
Shallu.
you.
So over to you then.
Yeah. Thank you. Thank you so much, Ruchi. I hope I am audible and visible to everyone.
Yes, you are absolutely. If you could just tilt your camera a little bit because we can see like three. Yeah, this is much better. Thank you.
Oh, yeah. Thanks. So it's an absolute pleasure to be part of this session. And as Ruchi said, yes, I'm an absolute believer of Account Aggregator Network. I feel that this framework is definitely one of the digital revolution which is being brought, and there are many people who are working on this roadmap. Sahamati being one of the key teams who are doing it. Along with there are various other participants I know who are helping this cause. But I'm just sharing my perspective to this audience or the group. And I like to bring it with anecdotes also. But all I like to say is that Account Aggregator, in simple terms, in my mind, is empowering the individuals one single and secure platform to unlock the full potential of their financial information or data one beholds. If I have to decipher this further, just visualize this, that I belong to a lending industry or a banking industry. I don't even remember when did I go last to my bank branch to even withdraw a check or cash or do any kind of payment. So that's the kind of change we have seen over a period of a decade or plus, where the entire banking today has become so touchless. And now the world is moving towards lending becoming touchless as far as possible. So there was an era where one had to apply for a loan and one has had to take, a time out, go to the branch, ask for bank statement, get a signature from the bank manager, and so on and so forth. But in today's time, I would say it's in large part, at least in our regime of things with Tata Capital or most of the financiers I know, most of the things are becoming paperless. When I say paperless, there are means that customer could be mailing you the bank statement and it can become paperless. But is that sufficient? The answer today is obviously no, because when you have framework like Account Aggregator, where you are getting the information right from the source, which is the bank, not only you end up getting things in a touchless form, but also the risk of any fraudulent element goes away. And what does it do for all of us from a banking fraternity? Obviously, you are getting the information of the customer right
Shallu,
from the source.
I'll interrupt you. Sorry, I think we are getting some messages that you're not audible or people cannot see you. I'm really sorry to interrupt, but Ruchi, can you confirm if everyone can see?
When I
See,
am
because
getting
we are
this,
seeing 5 or 6 messages on queue that
Sure.
they cannot.
Sure, I'll take a pause.
yeah,
Yeah,
Shallu, will you
sorry.
be
Sure,
able
sure.
to stop the video and start again once?
Yeah, I'll log back, Ruchi.
Join, हाँ.
I think I'll log back.
Sure. Uh,
But just
So
to
is Ruchi visible to everyone? If
we
everyone
were
can
able to hear both of you very clearly. So I'm sorry.
no, not here. I would also want to know if y'all can see us. I'm getting
Yes,
messages that people
yes,
can
we can
see
see
us.
both of you. We were able to see Shallu as well as we can see
Oh,
you
okay,
three.
okay. Because we saw some 5, 6 messages coming that we are not able to see. So,
All good, all good.
okay. So let her come
Okay.
back and.
Yeah, I'm back, and am I audible and visible?
Yes.
Yes.
Should we
Yes,
do a
I think
check
we'll
with the
continue.
audience?
They will message us. I think we'll continue.
Okay, fair enough. So I'm just repeating some part of it of the earlier excerpt for benefit of people who could not listen earlier. So I am saying that look at the era earlier, what it was, that we used to go to bank branches, and if we were seeking a loan for, you had to fetch your required statement, which could be 6 months to 1 year, depending upon the banker's need or the financier's need. Now in today's time, we end up getting that straight from the source, which is the account aggregator framework, and right from the bank with whom you're banking. And one of the most important part, which I was saying, that as a bank, as a financial institution fraternity, this is so important that we get the information right from the source, because it does away with all the possibility of any fraudulent transaction or the source who's providing us the information. It not only saves the cost, the biggest benefit is we end up saving the turnaround time for the customer as well as from a processing part of the initiation. Important thing to note, because of this, today the thin file products like a personal loan or a business loan of a small ticket size, today the turnaround time could be as low as couple of hours. It could be a couple of hours, it could be same day, but on an average, it has taken or brought down the timing by minimum 50% for most of the unsecured product. Of course, in the secured product side as well, which obviously like home loan and car loan, given there is an asset side involved with it, there are processes involved along with that. It may take a little more while to give the sanction, but overall TAD from a lending or a sourcing or loan perspective, I would say has considerably reduced. One of the other favorite point, which I believe that should be highlighted in this conversation, is the kind of carbon footprint that this whole system is doing for all of us, or we all are participating in that saving of the carbon footprint. And I think it's time we should start measuring that, because all of us know, with the UPI payments being there, our customers have thousand pages of a bank statement available today. Just imagine if you have to put the heap of papers in a file and file it and send it to your central storage unit. But all of this is not anymore required thanks to the account aggregator framework. So all of us are contributing to the carbon footprint. It's time we start measuring it. But before that, my belief is that all of us should start using it, adopting it for all our product and channels. We are doing it at I can assure you, at our company, but one has to think of approach which suits right for your organization. But there were challenges earlier from some amount of data transfer and things, but trust me, for last 3 months, or actually last 4 to 5 months, there is a considerable progress which has happened on overall framework efficacy, success ratios, which has happened in each side of the business, be it the first time acquisition or the recurring side of it. We have seen considerable growth. And I believe that all of us should end up testing it, using it, and to believe this. That's my thought. Thank you so much. That's from my side, Ruchi. Shalini, over to you guys.
Thank you, Shallu. Yeah, Ruchi.
Yes, thanks a lot, Shallu, for giving us a really deep perspective, I must say. And thank you for your kind words about the ecosystem as well. I'm sure a lot of people would be encouraged now with a company like yours and a person like you having deep faith and belief in the framework. Moving on, thank you so much. Moving on, just before I go ahead, can you all tell me if you all are able to see the other panelists whose videos are on? If somebody can just type a message or something. Because there's
No, Ruchi. I don't know what the issue is today with the
Simran or anybody can let us know.
that is very strange. Okay, Abhishek, will you be able to share the presentation? Let me see if the presentation can be viewed.
Maybe can you make them as co-hosts? That might work.
So all the panelists, they're panelists, so they will be able to.
रुचि बताओ.
हाँ, मेरे को दिख रहा है. If y'all can
Yeah,
tell me.
we can see. Yep.
No, Khushru, you are the panelist, so maybe you'll be able to see. I would like to ask some attendee if they are able to see. If anybody can drop a message.
Yeah, they can.
Okay, perfect. Okay, great. So PPT is visible. That should be good. Okay. So yeah.
Okay.
Okay, thank you very much for being patient through this technical glitch. We will find out what has gone, what is different this time. Let's move on to today's presentation. As mentioned earlier, when I gave you all a brief, today's presentation, we want to take you all through what has been the paradigm changes that have happened in the last 1 year in the account aggregator ecosystem on a number of parameters, including, of course, statistics and use cases and external environment as well. So, Abhishek, will you be able to move the slide, please? Okay, so this is a beautiful slide that actually tells you how consistently the account aggregator ecosystem has been growing month on month on month. We are at 143.61 61 million successful cumulative data cumulative consents that have got shared over the last 3.5 years. That gives us a very beautiful upward moving trend has been able to satisfy a number of use cases that we are going to share with you in the coming slides. If we move on. Now, month on month, if you see, there has been about 8.5 to 9 million successful consents that is getting fulfilled consistently. We can, if we extrapolate that data to the number of data pull transactions, we can safely say about 120 to 150 million monthly million data pulls are being done on a monthly basis. This is so if you see here also, barring a few months in the fag end of the last year, we've been seeing the year previous, we've been seeing consistent growth in 2024. This is a short snippet of how there is, how has been the impact of account aggregator on two largest use cases that are existing today for in the ecosystem. The largest use case, which takes away about 80% of the entire successful transactions, is lending. And there are some mind-boggling numbers that our team has been able to collect for a biannual report that we release. If you see some of these numbers, 88,700 crore worth of loans that have been disbursed since inception to date using account aggregator as the data sharing framework. In the last half of the financial year 2025, about half of this total number has been able to we've been able to get half of this total number from the last half of the last financial year. So 46,200 crore worth of loans have got disbursed in first half of the financial year of 2025. So to be specific, from April to September of 2025 financial year, which is half of the total since inception. Likewise, if you see the loans that have got disbursed since inception is 9.7 million, and more than half have got disbursed in the first half of the last financial year alone. Average ticket size, which was for the entire 3.5 years, 92,000, has been also on the upper end in terms of average value, which is 84,500 in the first half of the last financial year. Sorry, it's a little bit of a confusion. It's become like a tongue twister for me today. But what we are trying to, fundamentally show over here is the ecosystem has been in full throttle in the last 3.5 years, but The financial year 2025 has seen some mind-boggling and exponential numbers, and lending being the biggest use case has actually shown us the scalability that the ecosystem has been able to get. On the PFM side, which is the second largest use case in account aggregator today, we are seeing a 28% quarter-on-quarter growth on consents fetched. Now, these consents have been gauged for a report that Sahamati had released, a report on personal finance management, fundamentally done by registered investment advisors. We came across this statistic that there's a 28% quarter-on-quarter growth by consent on consents fetched by RIAs since April, and a 10 to 10.5 million estimated PFM customers have been served by the financial year 2024 for this specific use case alone, which is personal finance management.
Could I move ahead?
Yes, please. This is what our ecosystem looks like today. We have from a number from a single digit number of FIPs and FIUs in 2021 to today being over 600 live participants in the ecosystem, having 580 FIUs, 173 FIPs, 17 account aggregators with whom you can actually create a handle and actually enable data sharing. An extension of our ecosystem is also our technology service providers and certifiers. It's safe to say that we cannot possibly get all the logos of the ecosystem onto a two-dimensional graph. So this is just a small snippet of what the mammoth ecosystem is today. Okay, moving on to the second segment of this presentation, where we are actually going to take you through some strong trends that we have seen in the last year and are expected to show are expected to result in a very, very healthy scale up in the next 1 year. I would like to invite my colleague Abhishek to take us through some of these trends.
Thank you, Ruchi. So as Ruchi mentioned that has been an exponential increase especially in the first half of financial year 25, and we have seen the same numbers previous to that half yearly data. There are key factors which are responsible for this growth, and also some of the initiatives which we are taking right now will ensure that the scale up continues. Talking about starting with the supply side things which have worked out and which is further improving. I'll take you through how the spread of different data types and different entities who are from a data provider's perspective. So we have around 173 data providers coming from different category of SIPs and coming especially all private sector bank, majorly all bigger private sector banks and public sector banks are covered. The overall coverage in terms of GST and data depository is 100%, and we are seeing adoption coming from even urban cooperative banks joining in. On the right hand side, you can see there are 16 different data types which are now available on AA. And I remember the times when we used to talk about, especially from the lender side, that the processing will be done with minimum data set. Now, during our interaction, we have seen that many of the companies are working towards getting more data from the customer, understanding it better, and giving them a more personalized offers rather than a vanilla program. So we are moving towards an era of more personalized financial services. Overall, around in terms of account link, we have 119 million account link coming from around 155 million A handle which were created. These handles means that most of these customers would have linked some accounts. So now whenever they come and share the same handle for any other financial services, they will not, don't need to do a OTP or a link, which you used to do for linking the accounts. So that is something which will help in further adoption and increase the conversion rate, which you used to observe. In terms of API performance across discovery, linking, and fetch, which were the major APIs, we see consistent growth. A year back, from a average conversion of 35 to 40%, we are now seeing companies talking about even more than 65% conversion rate in terms of data. And during my recent interaction, I could clearly see that from the overall banks which are there on AA, around AA is one of the most preferred way of taking data. And secondly, overall banking, which is being taken for analysis and underwriting, overall 90% coverage in terms of that. Overall, if you consider 100 bank statements were taken, 90% were going through A. So these were some very encouraging numbers we have started getting from the lenders, and also the usage has increased. There were some pressing issues on the data quality, especially on the mandatory, and some confusion on optional fields or understanding which FIP had. So now Rebit, with their latest circular, which has come recently, has confirmed that all the mandatory fields like your there were some concerns on some FIPs giving standard or dummy value in date of birth, or giving mass PAN numbers. So those, now it has been clarified that if that data exists with the FIP, you have to give the exact same data, and no null data or dummy data can be passed. On the optional field side, where some FIP interpreted that uh, that if the field is marked optional, it means that they might share or they not may not share the data. So now Rabbit has clarified, if the data exists in these fields, the FIPs have to share this data. So overall, from a regulatory point of view, we are also seeing traction coming in and pushing towards standardization and filling the gaps which are there in the ecosystem, and hence it is contributing towards more use cases, and uh, A becoming a most prime channel for getting the data from the customers. The second one is, we are seeing that apart from normal retail use cases, now companies started doing corporate. They have started thinking over some corporate use cases, which I will take you through. And also, we are seeing non-credit use cases picking up. Wealth is one of the most prime use case. So, in terms of the users of Account Aggregator, we are now at 580 FIUs who are using the ecosystem, majorly all PSUs and bigger private sector banks. Overall, NBFCs are one of the bigger users of this ecosystem, apart from RIAs who have come now for in terms of wealth advisory and PFM services. So I've just jotted down some of the use cases across different channels. So from a consumer point of view, people now can have a 360 view of all the investments they have made, and also can get personalized services. We are seeing more traction being coming on basis, because GSTN has also gone live. So we are seeing that companies are working towards invoice financing and cash flow based financing, something which will be picking up. Talking about, if from a bank perspective, if, one of the use case which banks are deliberating is how account aggregator can be used at the time when customer requests for opening a bank account. So apart from analyzing the customer riskiness or doing due diligence for the customer at a profile level and at different APIs on AML checks, etc., they can now have a view of his existing bank account and what transactions they are doing. And at the transaction level, they can even see if whether customer don't is not involved in something which can be a caution for the banks. Since data is coming directly from the source, so fraud has been one of the risk, and fraud is one of the major use cases which lenders are appreciating, because even from having the capability of sampling such documents, but from a lender point, they can only get the 2-3 transactions vetted now. Since the data is coming from account aggregator directly from the source, the lender is now 100% sure the data, there is no fake data, and the underwriter is confident in terms of uh, giving the best offer to the customers without worrying about the maybe the fraud nature of the documents. And also, because of availability of more data set, now you can give a better offering to the customer. Also, the other on onboarding side, we are seeing quicker form filling, and also your digital underwriting is something which is being done right now. From a security assessment point of view, LAS and NAMF is something which is just evaluating how account aggregator can be used in terms of giving customer eligibility and maybe refreshing the loan eligibility once the loan is given. Guarantor evaluation and own contribution, especially it comes into secured loans perspective, giving housing finance and loan against property is something where the use case implies. At the post-sanction and disbursement stage, few companies are doing bank account verification, and also one of the prominent use case at the lender end, especially in the products like business loans, where market practice has been into a lot many DSAs or channel partners apply customer loan at the same time so that the customer can get loan from multiple lenders, and hence account aggregate can be a tool where at the time of disbursement you can have a sense of if there is no other loan which has been credited to the customer account, so stopping parallel funding, which was a major concern in this segment. Monitoring and collection is one of the new innovative use cases where account aggregators has enabled lenders to actually come up with more innovation. Lenders now can do and use monitoring for loan proceeds, and also even NBFCs are starting, apart from doing coming up with a more sophisticated early warning signals. Generally, NBFCs used to rely on their repayment track record and data from the bureaus which they used to get. Now they have more real data about the current banking transactions, and now you can build good EWS systems. Also, apart from this, now account aggregator, they have started thinking of using it for their field agents to monitor if Ruchi, are you saying something?
No, no, Abhishek.
Acha.
Sorry.
For the field agents and even the employees, at the time of onboarding, the companies are evaluating if account aggregator can be used to get data, and especially in the collection agent, if they are not indulged into getting money from the customers, so avoiding those compliance issue, account aggregator can be used. This is something which they are thinking of. Obviously, Sahamati don't advise on use cases. It is as per the lender, they have to be sure that their compliance is in agreement with the use case they are building. On the collection and recovery side, there are other use cases in terms of efficient repayment collection strategy. Like now, NPCI has told that you can't represent NACH more than 3 times. Now, companies are coming up with a model which tells them which allows them to have access to a banking data and see what is the current balance and ensure that the EMI is presented only if the bank balance is there with the customer. So how effectively they can do, there are tools which TSPs provide and companies have built in-house. Also, because collection is a activity which involves in-house sales team and also vendors, you can, via account aggregator data, you can ensure that while allocating the cases, you can do a lot of cost saving at in terms of getting an insight if the case should be allotted to a in-house team or to a collection agency. uh, so that is something which companies are doing apart from skip tracing and personalized settlement offers. If you have a sense of what customer account balance is, you can understand that how much money, what should be the best offer you can present to the customer in case of settlements. So these are broadly the use cases which are going across into banks and lending domain. Fintechs and TSPs are enabling these use cases, working along with the REs to build these use cases. We have just done a small mapping of adoption across different lending products, across different lender category. So we see A being adopted across all financial products, especially NBFCs are the early adopters. But now we are seeing more traction coming from public sector banks and private sector banks who have initially enabled it for maybe new to bank customer and us digital flow. Now they are also working, moving towards non-assisted and non-digital digital processes. One of the encouraging case study which we recently got was there is a huge impact in terms of loans. So approximately 5 to 10% of loan amount got increased across all the product this company is currently working on, like CDPL, SME, and two-wheelers. ENH efficiency also increased from 5 to 35%. It means like when you represent the success chances before A implementation was 5%, now it has gone to 35%. They are also doing a business fitness report in terms of educating customer on their financial literacy and credit health, building trust for the company. So yeah, now I'll hand over it to Ruchi for her to tell you about more on what is happening on especially SEBI and IRDI regulated entities. Yes, Ruchi.
Yes, thank you, Abhishek. So we'll quickly go through the non-credit use cases that are active in the ecosystem. Uh, uh, of the consents that we have seen, 143.61, nearly 20% of these consents are towards non-credit related use cases. Amongst the non-credit related use cases, it is the SEBI entities which are running with personal finance management as a very prominent use case that are in the forefront. Now, SEBI entities, as we know, as users of data are spread across 5 to 6 large categories. Investment advisors, followed by stockbrokers, research analysts, portfolio managers, registrar and transfer agents, and AMCs as well. The last 4 categories, which you see on the screen, RAs, PMSs, RTAs, and AMCs, have a smaller share compared to RIAs and stockbrokers who are using Account Aggregator and looking at Account Aggregator as a very prominent method of data sharing for enabling some of the very important use cases. RIAs and PFMs and PMSs use personal finance management as a use case. Stockbrokers, in addition to personal finance management, also use income verification for the F&O segment as a very important use case, which is enabled by Account Aggregator, leading to some really wonderful operational and cost benefits in their process. RAs are using it for portfolio reviews. RTAs today are using it for bank account verification. Also, a small use cases around compliance reporting for around insider trading. And AMCs are using bank account verification. And also, there have been some requests around portfolio, personal finance management. Will you move on, Abhishek? This is a small use case that has been shared by an RIA, where so we have had the beautiful thing about Account Aggregator adoption in this domain has been twofold. We have had existing investment advisors who have adopted Account Aggregator, and we also have some AA first investment advisors. That is, they have started their entire use case using Account Aggregator. And in some cases, the company has been basis Account Aggregator is the preferred and default data sharing method. One such investment advisor has shared a very impactful use case with us, where he has said that on a consolidated level, the RIA has said that the frequency of a user visiting the app has increased by approximately 60% once his bank account has been linked. So once the bank account has been linked, he's able to show a consolidated view of the customer's holdings on a daily basis. And because it's refreshed regularly, the every time the user visits the app, he gets to actually have the the most recent view of his investment status. There is lesser uninstallation rate after the linking has happened. There is higher amount of time spent on the app because there are because even RIAs are able to perform better analytics, give better, more in-depth, perspective on spending patterns, on budgets, on various other kind of savings patterns of the customer. It is very engaging for the customer, and therefore the time spent by a customer has increased approximately by 12%. 45% of the customers complete the AA-based bank statement sharing for availing higher credit limits. So this is beautiful because if in the journey where a customer is trying to avail a particular product starts with sharing bank statement, and when the bank statement is shared, the provider of the service provider gives an option to the customer to share another collateral which may increase his credit limit, and that's when they share probably an insurance policy, or they share their securities information, and this allows the customer to increase their credit limit than the earlier option or opportunity that they were getting. So the RIA has been able to do some analysis and say 45% of these customers have been able to get a higher credit limit compared to 7 to 10% of the earlier number. So this particular RI has actually transitioned from an SMS-based spend analysis to a completely account aggregator-based spending and budgeting analysis for their customers.
Should I move in?
Yes, please. Okay. On the insurance side, we typically see three types of use cases across three entities, which is life insurance companies, health insurance, and general insurance companies. Life insurance companies have used Account Aggregator for financial underwriting. In fact, this time, the company that one of the largest life insurance companies what won the Digital Transformation Award in our Samvad, where they've been successfully been able to use Account Aggregator to show some very impressive numbers and impressive statistics, around data sharing and quick dispersals, turnaround times, better persistency, so on and so forth. So in fact, one of these largest insurance companies is also hoping that they can make Account Aggregator as the default mode of data sharing for their term insurance policies. Health insurance companies have been using Account Aggregator for bank account verification. In very, very, very few cases, some have also used in case any financials are needed. General insurance companies are also using for bank account verification and financial underwriting. But if you see usability of health in general versus life, then clearly life is ahead of the other two entities, other two categories. So the life insurance company has again shared a very beautiful impact analysis that they have done with Account Aggregator, where they've said that documentation collection alone this time has reduced significantly to about 3 to 4 minutes than the earlier than the earlier number, which was, I believe, about 20 minutes, or rather it used to sometimes go in days and months if the customer is unavailable. So this amount document collection time has also reduced significantly. 30 to 40% reduction in time taken for underwriting, because data is coming straight from the source. It is clean, it is clear, it is non-fudged. Underwriting processes are very easy and actually can be embedded into the underwriting softwares that they've created. 80 to 90% cost reduction as compared to earlier means of collecting financial data. So there is a time reduction impact that they have studied, and they've also studied a cost reduction impact on data collection. And 70% decrease in insufficient document cases, which in the underwriting parlance we call as pending cases. Pending cases for term insurance policies have reduced by 70% in case of this particular life insurance company. Abhishek. Okay. Moving on to the third trend, which is ecosystem has done significant work towards ensuring fair use of Account Aggregator via participatory governance. I would like to introduce Shalini. I would like to request her to come on to the stage and take us through the next few important slides.
Yeah, thank you, Ruchi. So while we have gone through, the emerging use cases and the increase in adoption, the emerging use cases, and the variety of financial institutions participating in the AA framework, we also need to see how this has been now this has moved into a stage where we need to do it responsibly, because with scale there is a lot of responsibility on the ecosystem to ensure that the data usage and the data pulls are in accordance with the use cases, as per the needs of the use cases. So just because there is a facility available to fetch data doesn't mean that we can end up pulling as much data as we need, and therefore there was a need from the ecosystem to build up a fair use framework in which we can define some best practice codes of conduct for the financial institution users and ensure that the system becomes sustainable. Because at the end of it, if there is a unbridled usage or unoptimized usage of the account aggregator framework, it can lead to a load on the financial information provider's core banking solution, as well as it can also lead to some sort of a distrust building amongst the consumers. So if they see unreasonably high pulls or requests for data, they may actually be averse to giving or coming on board the account aggregator framework. So to look at putting a fair use framework in place, Sahamati, along with an account aggregators and the entire ecosystem, which includes FIPs, FIUs, AAs, have started this initiative of building a fair use framework. And the reason we thought it will be important for the audience looking here, who basically are either onboarded on AA or in the process of onboarding AA, should actually go through each of these codes of conduct and best practices carefully and ensure that it is in line with the ecosystem expectations. So there are three parts to fair use framework. One is defining, because to be able to implement fair use and best practices, there has to be some benchmarks against which you have to evaluate your implementations. And there, Sahamati has actually done a lot of work working with each of you, either through working groups, user councils. We've got a fair use committee. We've got our governing council who've guided us in the process. And we have come out with several artifacts that are available to the ecosystem as and when they decide to kind of start using the AA framework, or if they're already using it, how do you optimize it? So the definition includes a fair use template library, where we have defined some 15 consent templates. So each of the user group in the market, different user group like the lenders or the insurance companies or the asset management companies, PFM providers, they came together in user councils and together decided that for their particular use case, what is their need of data. So for example, lenders on the group decided that if we have to underwrite a loan application, it has to be only a one-time consent request. Lenders said that we don't need data beyond 14 months of bank statements. They also agreed that they only need to process the data for a month. So there were these guardrails and these outer limits, bounds, which were agreed by the lenders. Likewise, we had a similar group on PFM, which agreed on values which were reasonable for their particular use cases. Similarly, we've got codes of conduct on how should the consent screen be displayed to the customer, what should come in level 1 info, level 2 info. So there is a customer experience checklist, UI UX design guidelines that have been published by Sahamati. All is available on our website. We request all of you to go through it and reach out to us in case there are any clarifications required. But now that we've done definition and we realize that at scale, this ecosystem will reach out to more than 10,000 financial institutions. We are already at 600 plus. So there has to be some mechanism to ensure that there is a real-time monitoring of the usage of the account aggregator framework. And that's where we're planning to implement a fair use framework. I'll cover the details in the next slide, where on a real-time basis, the account aggregators will, check the incoming consent request, match the values with the fair use templates that have been agreed and decided by the ecosystem itself. And if there are any deviant consent request, there could be some actions such as blocking or reporting and all that can be taken on that. So this is something which is under process, will get implemented over the next few months. And hence it becomes extremely important that as FIUs, you ensure that these are embedded in your, account aggregator implementations. Other than that, we're also kind of going through the journeys the UI UX of some leading institutions, the top 30 FIUs, and wherever possible, we reach out to the FIUs, discuss this with them, sensitize them that why is it important to actually kind of adhere to best practices and follow up for corrective actions. Next slide, Abhishek. So this is another initiative. This is basically the fair use initiative which I was talking about. So as we all understand, there were 5 purpose codes which have been given by Revit, and these purpose codes are quite broad, and hence when we came down to defining the templates for each of these use cases, there was a need to subdivide each of these purpose codes into finer use cases. So what we have done is basically worked with the industry to work out some around 15 consent templates, fair use templates, which are available on our website. Some of them are in process, will soon be published, but around 9 or 10 of them are already published on the website. And hence you'll have to kind of refer to the template which is what you want to implement as a use case. So for example, if you're planning to implement a loan monitoring use case, given that it is a purpose distinct from loan underwriting, you'll have to take a separate consent from the customer and then adhere to the template parameters which has been agreed by the user groups. So going forward, from purpose code, it will be a movement towards ensuring that the fair use templates and the consent template IDs are what you need to refer to. I like to qualify that this is an industry initiative, ecosystem level initiative. It has nothing to do with Revit APIs, but this has been done by the ecosystem to give more structure and direction to the ecosystem on what is the right usage and how do you ensure that there is standardization in use for different use cases. Next slide. I'll not take a lot of time here. We'll come back to you with a dedicated, session on fair use. But like I said, the fair use templates are now available on APIs, and we expect the FIUs to actually, when they are creating their consent request, refer to the fair use template that is relevant to them. And we need to have a builder approach where the FIUs can pass this fair use template ID to the account aggregators. What the account aggregators will do is, based on the fair use template ID which has been passed by the FIUs, they will also refer to the fair use template library, pick up the corresponding values, and they'll run a set of rule engines to identify the consent requests which are non-compliant to the fair use template. And then there are discussions on that there could be certain actions which can be taken by the account aggregator on such consent requests, which could include blocking that consent request, sending a error code, culminating all this into a report which can be referred to by the ecosystem in terms of seeing what is the progress being made on the usage. So this is how it is designed. Yeah, Abhishek. Right now, given that there is we do not have a complete understanding on how the fair use template ID could be passed from the FIU to AA, the AAs are actually working out a set of rules and logic by which they will identify internally which fair use template ID. So with the purpose code combining with the license and a few other parameters, account aggregators will start deploying the fair use template, and we are expecting this to be implemented over the next 2 months. So, and that is a period where we expect all the FIUs also to start adhering and adopting the fair use framework in their rollouts. Yeah. So, yeah, over to you, Abhishek. I think we'll now have Ganesh to take us through the interoperability solution we are working on. So over to you, Ruchi, if you want to set up the context.
Yes, thank you, Shalini. Interoperability has been a very big question mark ever since Account Aggregator has gone active. And Sahamati has, of course, we've tried to, brainstormed on how we can create solutions for interoperability. And finally, we do have a technical solution that we would like to present today, which will completely take care of issues around interoperability. I would like to invite Mr. Ganesh, who is the head of product and engineering capabilities in Sahamati, to run us through how the new model that Sahamati has is planning to go live with will solve the interoperability issue.
Yeah,
Ganesh,
thanks, Ruchi.
Yeah.
Yeah, can you all hear me? Yeah.
Yeah, Ganesh.
Okay, good. So, so the old model or the current model is there are FIPs, AAs, and FIUs, and in some sense, all FIUs in an ideal situation, right? You to get full coverage. Every FIP, every A has to connect with every FIP. It doesn't matter whether they're SEBI regulated, IRDA regulated, or PF regulated, and so forth. So integrations have become a challenge, and financial institutions, FIP especially, find it very difficult to onboard every AA because they go through a whole lot of rigor. Similarly, on the FIU side, if they want to have a choice of the AA they have to work with, and there are about 17 or 18 licenses that have been given out, every FIU has to integrate with many AAs. And if you look at it, the integration problem is in itself, it's a huge problem, right? So mathematically speaking, if there are L number of FIPs and M number of A's, that's L into M, plus you have to have M into N number of FIUs. So it's a fairly complex integration situation we are looking at, and thus the pushback from financial institutions and to solve this problem. So the approach we've taken is, if you go to the next slide, what we are calling is a very thin piece of logic called the router. Okay. So what the router really does is, and I'll just stick to, I will not go through all the use cases, but stick to only one, which is the data pull. So FIP initiates a data pull, it comes to the router. FIP tells us which AA to go to as part of the X metadata header that Shalini spoke about in just about a minute ago. So that will be it will be a label in terms of which, it's called an entity ID, right? So which AA to route to. We in turn figure out, the A in turn will tell us which FIU to route to, and therefore the flow vice versa also happens. Now, what is the advantage of this? As is shown pictorially, now all we'll have to do is FIPs have to integrate with the router just once, AAs have to integrate with the router just once, and FIUs have to integrate to the router once. So what was really a multiplication problem now is an additional just an additional addition problem, or the complexity where you have M plus N integrations, and it's all not done, but it's far easier to go this way, and it also allows for many other AAs to come in and maybe merge, and FIUs to join. So it's some sort of an enterprise bus, if you will, right? And there are many other attendant benefits to this. And if you go to the next slide, I don't know if the next slide is there. Yeah. So today we have a challenge in that every AA has to send MIS data, they have to send network health data, and so forth. But if you put the bus in the middle, the router, what we call as a router in the middle, through an observability framework, which will be hosted in the Sahamati infrastructure, we can get the MIS reports from the single source of truth. We'll be able to get network health, the SLA reporting. I'm not talking about SLA adherence, but I'm talking about SLA reporting, and NOC support for our own benefit, right? For somebody's benefit. We can also do audits in terms of, for example, if an FIU has submitted 1,000 requests and they've got back results only for 900, we can account for what happened to the 100, right? There could be success, there could be failure, and maybe there's no answer to some of them. So it'll be easy for us to reconcile. And then we'll also be able to provide some sort of reconciliation support for billing in terms of how many requests, because the bread and butter is data pull. AAs charge an FIU a certain amount of money for the data pull. So we'll be able to support the entire ecosystem with what has come in, what has gone out, what has been replied to, and so forth. So it can easily lead to a situation, it can easily help us reconcile, and the billing can be more accurate. And other than that, it also allows us to build more analytics on this, which benefits the entire ecosystem, right? So these 6 boxes that I show are what is in what we call as a Sahamati net right now. Below what we call as a router are this tokenizer and central registry. We already have that, and we're also building something called a self-service portal, which will help make the onboarding process much smoother than it is today. Today, There's a lot of email exchanges, certificate and incorporation material, artifacts being exchanged over email and such. We'll streamline all that through the self-service portal. Do we have a next slide, Abhishek?
No.
That's it. So this is what Sahamati Net is all about. Now, in terms of roadmap, we are actually engineering ready as of tomorrow, right? We'll be engineering ready, and we are starting a POC rollout in another 15 days. We're inviting AAs, FIPs, and FIUs to participate in that in the POC. Then we'll have the MVP stage. And if anybody is curious, just write to me. I'll be happy to share the roadmap. Once we get ready with the POC by end of March, we're looking at it about end of May for the entire production to be ready. Now, the point to be made is we'll go production live as soon as we get an okay from the regulators saying that you can deploy this, right? So that's it on Sahamati Net.
Thank you, Ganesh.
Thank you so much, Ganesh. Thank you for bringing that perspective out. Thank you very much for introducing everybody to Sahamati Net and how it will work and how it will solve the very big problem of interoperability. So now we move on to the fifth section of this presentation, where we are actually talking about the very much talked about Digital Personal Data Protection Act and how it is going to be, how is it related to account aggregator and consent managers. To give you a very latest perspective on DPDPA and alignment of DPDPA with consent managers, I would like to invite Pranav Narain. He is the legal counsel in Sahamati, and he will take us through the next few slides on this particular topic. Pranav, will you be able to please put on your video?
Yeah, Pranav is here.
Sure.
I can see it.
Am I audible?
Yes, Pranav.
Yeah, sure. So I'll quickly just take everyone through like a high-level overview of the DPDP Act and the draft rules which recently were notified. They're currently in public consultation stage, and feedback is open until the 18th of Feb. And METI has been doing a lot of public consultations, listening to feedback from across the industry and across industries really, because it's a general law. It applies across any personal data, any digital personal data, whether it be in banking, insurance, or any other sector really, even outside of finance. In the context of the AA ecosystem, what is important for us to know is that the AA framework, largely coming from the RBI master directions, as well as the REBIT specification, is largely aligned with the DPDP Act in terms of the very underlying framework of the DPDP Act being the notice and consent framework, where the DPDP rules sort of bring in more clarity in terms of the notice requirements. What are the kind of elements that should be there in a notice? So the notice should be in clear and plain language. It should have a specified purpose, an itemized list of the kinds of goods and services for which the data is sought, and should be understandably independently to a reasonable person. And that is sort of building upon or further clarifying what was already there in the master directions, which is the first place, in fact, in Indian law where the term explicit consent was used. And just to add to that, so once you have given a very clear notice to the end customer or the data principal, once they provide consent, the DPDP Act does have several provisions which imbibe the concept of purpose limitation, usage limitation, and collection limitation as well. So you should only collect data which is necessary, and the term used in the law is necessary for the purpose. You should restrict it to the specific purpose and use the underlying data only for the purpose for which you have sought consent. So a lot of the work which Shalini also spoke about in the fair use framework that we're building sort of complements what is there in the DPDP Act and the rules in terms of ensuring purpose limitation, usage limitation, as well as collection limitation, which are underlying sort of tenets of the DPDP Act. There's also several data principal rights. These are mostly against the data fiduciaries, which would be relevant to almost everyone here who has a customer-facing interface. So that's again one area which is relevant to almost everyone here on the call. And again, data minimization, data breach notifications, etc. There's a detailed framework there. We'll not get much into that, but what I want to focus more on is the piece on consent managers, which is a novel concept which is coming through under the DPDP Act and DPDP rules. It's novel to India. It's something which the IT ministry has sort of borrowed heavily from the account aggregator framework and tried to conceptualize that at a higher level across data types and sectors. Abhishek, if we could just move to the next slide. So we did a thorough analysis. We're working with a bunch of law firms as well as quite closely with all the relevant regulators in terms of mapping up where account aggregators lie vis-a-vis the consent manager framework. And what we find is that in pretty much all areas, account aggregators are qualified to be the consent managers for the financial sector. In that there is a specific illustration, in fact, in the data protection rules, which describes what an account aggregator does, which is enable the flow of data based on end customer consent between two data fiduciaries, which are FIUs and FIPs in our context. So the application and registration criteria here, of course, once you have an AA license, the only thing you might have to do is additionally get a consent manager license from the Data Protection Board. This would only happen once the Data Protection Board is constituted, which would be a few months down the line. And then after that, the Data Protection Board will open applications for registering consent managers. Instead of the scope of coverage, in terms of that, of course, consent managers are more broadly framed and conceptualized to cover all kinds of personal data. But an AA wanting to do become a consent manager would, because of the master directions, be a specific sector specific consent manager for financial information, which is defined under the RBI master directions. Then the other few things you see on the slide in terms of restrictions on outsourcing and business activities are largely aligned uh, uh, between the account aggregator and consent manager frameworks. Under both AAs and consent managers cannot read the underlying personal data of the customer. This is one of the core things which METI has borrowed from the account aggregator framework. Again, maintaining of logs of the consent artifacts is one of the core functions of an account aggregator, and similarly, one of the very important functions that a consent manager is envisaged to play. There is some work which is required if you look at the standard setting and the interoperability sections, where the Data Protection Board has been empowered to do the standard setting for consent managers and coming up with the technical specifications for interoperability. There we're again closely working with the IT ministry to make sure there is no disruption and there's business continuity for the entire AA ecosystem to sort of continue their operations in the world of the Data Protection Act. And there we'll be working closely with the Data Protection Board to make sure whatever is already existing in terms of the FI type schema and the underlying APIs for financial sector can be adopted as is um, by the Data Protection Board. And again, last thing is again on consent, notice and consent requirements, as I mentioned. The Data Protection Act simply builds upon what is already there in the RBI master directions and the Rebit specifications. And everything is really very aligned in terms of giving itemized sort of purpose codes, limiting it by purpose, only collecting what is necessary, and using only for the purpose for which it was collected. The last thing is in terms of grievance redressal, both the RBI master directions and the DPDP framework have dedicated grievance redressal obligations for AAs and consent managers. The only slight thing which might need a little ironing out is in terms of an appeal against the decision of on a grievance redressal complaint, where there could be the RBI as well as the Data Protection Board, which could step in. That again is a sort of purely legal consideration where uh, there is precedent in other sectors where there are specific regulators which take precedence and conduct the first level of inquiry, followed by a second investigation by the second regulator. So that is again a purely legal thing which can be ironed out. But largely, if we look at both the account aggregator and the consent manager frameworks, they seem perfectly aligned for AAs to become the consent managers for the financial sector. And that's something which a lot of AAs are very excited about, to become one of the first few consent managers who are operationalizing the consent management ecosystem in India. So yeah, we're working very closely with the regulators and the ministries on this to make sure there is complete alignment and it follows through smoothly. So that's about it from my side. Happy to take any questions.
Thank you, Pranav. Thank you so much. If there are any questions, you may type in here or just raise your hand. We're running a little behind schedule, but we'll be happy to take a few questions.
I think there was one question around AA. In this
Yes.
case, I think the question is, in this case, no need for multiple AA. What is a business case for the AA? How price competitions can be managed? Okay, so we don't get into this whole thing about your relationships. If you're an FIP or an AA or an FIU, your relationships will remain the same. So think of this as a metaphor. All the router does is provide a freeway from point A to point B, right? Who the FIU does business with, which AA they do a business with, and which AA has to do, let's say, a data lookup with an FIP, is something that this router will not get into. Okay, we don't play favorites. We don't have, we don't advise on, at least the current design. We have not been asked to by the ecosystem to let's say select, if there are multiple A's, select the best AA, best available based on some SLA and things like that. No, we don't do any of it. So an FIA has as an FIU, let's say you're working with 3 AAs, you just have to tell us which AA to route it to based on the X metadata header, and we'll route it to that's all there is to it. Does it answer the question, or is there more to the question?
Yeah, I think if they have anything more, they'll.
Yeah, they can ask. Yeah.
So, there is a question, Pranav, I believe it's for you. Can you be ready for having information compliant with the RPWD Act, which is Right of Persons with Disabilities, and Child Rights? They should help with fiduciary assessments and expert help.
Sorry,
You're on mute.
yeah. So in the context of the right of persons with disabilities and the whole concept of children's rights under the DPDP Act and rules, that is largely a compliance requirement for the data fiduciaries who are dealing with children in terms of conducting an age verification, as well as making sure they're getting appropriate verifiable consent from the lawful guardians. This really is a independent obligation for the data fiduciaries. So it would be for the individual FIUs, in this case, in our ecosystems context, to make sure that they are building in those systems to make sure that they are getting verifiable parental consent. In the context, especially given that we are regulated entities in terms of FIUs, largely, I believe the terms and conditions and the consent forms that most of at least the larger institutions have do cater to, at least in the case of child rights, make sure that they are getting proper consents from the legal guardians, which are largely parents, but could be other lawful guardians as well. And similarly, have systems for persons with disabilities. So largely, I believe, given that we're regulated entities already working with a framework to obtain appropriate consents, converting that into a digital sort of framework should not be much of a heavy lift. But of course, it would sort of depend from fiduciary to fiduciary in terms of their internal infrastructure and the workflows that they've built in.
We have Prashant who has asked a question. He would like to speak. Yeah, Prashant, I think you're unmuted now. You'll be able to ask your question.
Yeah, thank you. Thank you very much, Pranav. So yeah, this was the same thing that was I asking. So rather than relying on the individual entities to like create their own design around this problem, why not AA take the leads, or at least the ecosystem should like have a standard design to identify like what is the mechanism, because RPWD Act also provides for limited guardianship. So that's a little new concept. So all of us can read upon it and maybe find the best way to implement it as a like a uniform solution across. That's what my suggestion is. Thank you very much.
Right, fair enough. We'll definitely look into it and think through further in terms of, having a recommended framework potentially. Because as you said, it's a new framework. The certificates for lawful guardians, there's about 2,000 issued a year across districts. So it's really hard to track. There's no institutional mechanism for that today. But yes, we will sort of keep that in mind while we're working with industry. That's an absolutely fair point.
Thank you.
Some of the questions, thanks, Prashant. Some of the questions that you all have asked, which are around, account aggregator and how do different use cases work and how do they satisfy, the framework satisfies use cases like loan monitoring collection. We will be typing the answers here because we are running a little behind schedule. So we would like to proceed with the presentation. We will be typing the answers. I would like to ask Ganesh to just take the last question around Sahamati router. Because it would be hard to type that out. So it says if the Sahamati router actually goes live, how do AAs benefit out of it? Won't that induce bias wherein some AAs take up the onus of onboarding FIPs while others reap the benefit with minimal efforts?
Yes, I understand this problem, and this is something that I understand very closely. Yes, there are about 7 AAs who are active, and there are others who are waiting on the wings for a long time. Yes, so the investments that AAs have done, I understand the pain point, but in the interest of the ecosystem, I think we should have. And this is not some. This, by the way, this is not Sahamati's position. This is what the ecosystem has told us that that is needed. So there is our position is we will build the router. Yes, it is going to favor the new entrants. Yes, that's correct. But on the other hand, I would also say that the investments that have gone into the operations of running an AA and the consents you have are the consents you still have those consents. So that is not going to be taken away from this from the current AAs, right? So the new entrants. So this is the age of disruption within disruption. So unfortunately, we cannot stop the train of innovation and efficiency getting into a system. So if I were to, I can wear two hats. I can wear the hat of an existing AA and say, I've invested so much of time and money in integrating, and why don't others go through the same pain? On the other hand, if I look at it from a competitive point of view, it's better for the ecosystem to have n number of players, and then the market plays out in terms of who's best served by through UX and serving the FIPs, and let that market play out. So this is the so I understand both sides of the argument. Yes, so what you're saying is correct. There is sort of a give and take in this situation. Yes, you're right.
Thank you, Ganesh, for giving a really honest answer to this question. With that, we close the presentation, this part of the event today. I would like to now move on to the next part, which is a presentation by our associate member technology partner, Metis Intellisystems Pvt. Metis has been a new technology company in the account aggregator ecosystem. At least they've become members the first time with Sahamati, and what luck they actually got chosen in this for the first Pragati of 2025. I would like to call upon the Metis team to take us through the presentation and the solutions that they have for the AA ecosystem. I would request all of us to put off our video so that there's no distraction for Kushru.
Yeah, Amit, Mahima.
Yeah. So I think there is a issue. The video has been stopped, so somebody has to allow. Then I can only put it on.
For whom? May I know who's
Amit here. Amit
Saraswat.
Okay, please start now.
Yeah, thank you.
Yeah. So till Amit gets his presentation on, I would like to draw upon a little bit. So a fun fact, maybe Metis Intellisystems and Sahamati were born very close to each other. We were incorporated in July 2021 when Sahamati was incorporated in September 2021. And we have been witness to the development of Sahamati and account aggregators ever since. So we have literally been wanting, and as a lot of you have mentioned about the strong points of Sahamati, and we literally agree with them. And the biggest thing for us, Amit will get into the details of a lot of things, but the most important thing is that the prevention of fraudulent data from getting into the system. When there is only one source of truth, this is one of the major benefits that account aggregators and Sahamati provide for a lot of use cases that we have been talking about. Yes, generic use cases have been talked about in detail, but we would like to talk about some different use cases where we have benefited out of utilizing account aggregators. And Amit will talk about early warning systems, how account aggregators have benefited us in implementing account aggregators. So over to you, Amit, Mahima. So our team here, Amit is our Chief Product Officer and my co-founder at Metis. Mahima, Director of Business Development, and Archa is our Vice President of Engineering Principles. Okay, so over to you, Amit.
Okay. So let me just share the screen, please, and then you're ready to start. Is my screen visible? Can you please verify?
It's visible.
Okay, so good afternoon, everybody, and I'm presenting Metis Intellisystems for you. Basically, we are a fintech which is creating solutions for the BFSI, and we use a lot of artificial intelligence and ML. We have a very strong background in artificial intelligence and ML. So that way, we are a little different from companies which do traditional analytics. Moving on from here, let me just please put this away. There's a obstructing me. Yeah. So now what I'll discuss is, and as already discussed during the presentations, one of the largest use case for the AA ecosystem is the lending system. So I'll discuss about that. And what I'll also try to discuss is like, what are we trying to do, right? What is the problem that we are trying to solve? So I'll take a minute to discuss about it. So if you look at the challenges of the lending ecosystem, there are very high amount of inefficiencies within the lending ecosystems. And they arise basically because of these four reasons. One is that there is a limited data types. The mutually exclusive data usage, that means one data at a time is used and inferred. There is no bumping or cross-referencing of data. There is almost no process after the lending. So there is a very weak post-lending process and very limited use of AI. Analytics is what is very heavily used. The result is, if you look at it, a credit gap. If I look at it from the MSME side of lending, then this is 4.47 lakh crores INR, which is equivalent to the GDP of Ireland. And things are no better when it comes to the personal lending. So it is 4 lakh crores INR, and which is again equivalent to the GDP of UAE. So we have a kind of a gap which is equal to the GDP of two countries. And that's not the only problem. We are creating a gap, and at the same time we have high NPS also. And if you look at the current news that are floating around, the NPS seems to be moving a little towards southward, and there are a lot of people who are expressing concerns on that. So during our journey, we worked with customers, we talked with a lot of people, and this is how we operate. We call it the Metis way. Now, what we do is we consume data from a lot of sources. Now, this is a very difficult thing because the data comes in different shapes and sizes, right? From JSON formats to Excel formats to even scanned documents. So we are able to read those complicated things like scanned document. The scan could be a balance sheet or a bank statement or anything. And this is done by our platform, which is the intelligent data platform. We have branded it as Kanath. And what it does is it extracts data and provides basic intelligence, analytics, raw data if required, and triangulation of data. Once we have the data, what we are doing is we have built a suite of products which fit into the entire lending journey. So that means right from scoring to monitoring the loan and to monitoring the portfolio health. That's what we do. We also, now there are, with all these things in place, with multiple modules in place which fit the entire risk spectrum, there are NBFCs which are talking to us, and they are inviting us to be their risk partners. So what they're saying is we are good at acquiring customers, we are good at processes, compliance, everything, but maybe the risk the risk process is broken. The reasons are they are using too many providers, too many data providers, too many module providers. It's a very complicated thing out there. So we are trying to address that, and that part we call Netra Plus. And what we try to do is we try to maintain the portfolio. So it's an integrated approach to portfolio management. Now here, one thing before moving ahead, I like to let's say express one thing, that if this data is available, the entire data that we require, if this comes from believe me, a lot of hard work that we are doing would be taken away. Example, think about it, the amount of layers that we have built to just understand whether a ePDF that has been submitted for a bank statement, is that genuine or not. Believe me, we have done a lot of hard work for that, though we are appreciated for that by many of our customers, but there is a lot of resource that have gone into it. And if the entire spectrum of bank statements is available from a single source like Account Aggregator, then we can focus our resources more on building these solutions rather than building layers which may not be very useful anyway. So that's one place that we see the account aggregator thing coming in, or rather we are waiting for the account aggregator to come into play there. Now, I'll also like to showcase or discuss the different Metis offerings that we have. So in the lending category, we do understand there are different subcategories like personal loans, business loans. Like example, in case of business loans, we are able to do scoring based on just one document that may be like a bank statement or a GST or some other statement, or we can combine all of those things and give you a single kind of a scoring. We have a very nice risk monitoring module, and that has been possible only because of the account aggregator. And we have been successful in onboarding some customers, and it has been working very nicely there. One of the, let's say, the differentiating factor when I'm talking about the risk monitoring is we don't raise multiple flags. There are some people who are claiming to have early warning systems or risk monitoring kind of systems in the market. But how they operate is they keep on raising flags on different things. Again, it's a very, very divided kind of approach that based on some legal thing, there is a flag. Then because the GST has gone up or down, so there is a separate flag. So that's how it is happening. But what we have seen is when we use a very integrated kind of approach and use AI on top of everything, those single flags at times have no meaning, right? There are distinctly patterns which combine and then give a situation which may be a little worrying. So how we operate is, instead of giving too many flags and all those things, we give a very consolidated kind of a report, and we help you make a decision. And the decision is very simple. Is there a reason? Is everything okay? Is there something to watch for? Or is the situation not good? And if the situation is not good, then what are the factors why we feel the situation is not good? So it's like a second decision or a second person working with your risk team. So that's a different kind of approach that we take. And as I said, the account aggregator, of course, this thing can flourish very well, provided the account aggregator system becomes stronger, easier for people like us to work and cooperate. There are other things also that we do, like example, end use of loans is one of the problems that has been discussed. So we have released our first version to understand that if a loan was taken, then what was the effectiveness, what was the end uses probably that loan would have been put. So these are the kind of things that again requires a very heavy a kind of an input. Then only we can do, because we require constant data for that. That is a simple kind of a thing. So these are the kind of like offerings that we are doing. And also to remind you all, we are not into workflow based system. Like example, we are not LMS or LOS providers. What we work on is behind the screens, working on intelligence and data and providing lot of use cases for that. And we have some very good partners who we are working and testing our solutions, enhancing solutions. There have been some success stories, like example, in one of the cases we have worked with a large national bank in Africa. And there, like what we have done is we have used the full suite of products that we have, right from scoring to understanding the customer. Their SMS is allowed. I mean, from the government, the financial SMSs can be read and utilized. That's something that's allowed by law. And that's one very powerful application that we do. We use the SMS for early warning systems. We use the portfolio performance for dynamic scoring. These are short-term loans, and hence customers come very regularly. They repeat their loans, and we are able to do that. And we have been able to maintain NPAs, which are very, very less than the traditional NPAs that are existing in that market. The other success story is about the early warning systems, where NBFCs has been working on invoice discounting. Now they are extending this use case to cash flow discounting also. And we have been able to provide nice risk monitoring services to them. So when I say early warning systems, that should not be taken only in the negative sense. We are also able to tell if a partner is doing well. The early warning system should also tell you that some partner is doing well. It's a strong performance. So why not increase the relationship there, right? So not only warning about some bad kind of things, but also warning about cross-selling or opportunities that are available because a partner is doing well. So this is in short, like about us. Now, to accomplish this, I'd like to introduce my team also, because we are trying to accomplish something which is a little different. So we require a very strong team to do that. Kushu is here. So he is the founder and CEO, 30 years of experience with tech. He has been CISA. Now, recently only he has returned back the certificate. I'm Amit Saraswat. I've done my graduation from IIT Roorkee, and I was the first data scientist at Lending Cart. I worked with Home Credit also, so I have a very strong experience in the lending. And also at Goals 101, which has got sold to M2P recently, I was heading their team for finding out credit card insights. So good idea of lending and credit card industry. We have Mahima on the call. She has a 20 plus years of experience in international business, and now she's handling our marketing and sales and those functions, corporate functions here. We have Archa Kothari. She's just come out of Oracle, and she'll be the VP of our engineering. So this is the team that will deliver the results for you. And this is about our logo. So we'll be open to any questions about us or any questions that you'd like to ask.
Thank you, Amit. if there are any questions for Team Metis, you may type it or raise your hand. Okay, Amit, do you all can you all flash your email ID, please? Because in case anybody doesn't have questions now, they can reach out to you directly.
Sure. So how do I put it? Shall I put it in the chat?
If you don't have it on a slide, then you just put it on the chat, your contact details and probably phone numbers.
Sure.
Okay, so Mahima has
Yeah.
1 second, Mahima. I'll have to send it. Okay, so the team has sent their email IDs. Please feel free to connect with them for any of the solutions that they have showcased today. Thank you very much, Team Metis. I would like you. It would be. It was good, and you can actually stop sharing your presentation. Great. So with that, we come to the end of today's Pragati session. Hope this was enlightening for all of you all. We've tried to touch upon each of these topics as much as we could given the time frame that we had. If you all have any questions, if you all have any queries, as I always say, please reach out to Sahamati. We're extremely available to answer any of your queries and questions for a meetup or a discussion at any point in time. So as always, I will drop our email ID in the chat box.
Ruchi, just one question. Devdut has asked, I would like if Amit can answer it live. Amit, can you do that, please?
Yeah, sure, definitely. I'll quickly send so the question is, I think when you talk about bank statement for decisioning, is it a scorecard or a rule-based decision? No, I mean, the whole idea, Devdut, as I talked about, of using AI is that we don't want to do a rule-based decisioning because that can be a very, let's say, fixed kind of rules that we are doing, and we'll generate a lot of false positives also when we do that. So it's a scorecard-based kind of a system, and we generate that scorecard by converting this bank statement into a lot of features, and that features then get into a kind of a scorecard, which is a multi-dimensional scorecard. So I hope I have answered your question, Devdut.
Okay, great. Thank you, Amit. And Devdut, you can just share your email ID. I don't see his question anywhere. I don't know where you saw the question, but nonetheless, please share your email ID with him directly. Okay, yeah, Devdut has asked the question. I'll share your email ID with him, and maybe y'all can get in touch with him directly. Okay, so thank you very much, everybody. Please reach out to us, like I said, on info@sahamati.org.in, or please look at our website. There are regular updates on statistics and various other topics. Please, look out for our newsletter, which is sent around 10th of every month for anything new that is happening in the AA ecosystem. Thank you very much for your time today.
Thank you.